Welcome to the channel, everyone. So before we get started with today's video, I just want to thank all of my viewers and all of my subscribers for just continue to watch the video, subscribe, like, and leave comments in the videos. My channel has just crossed over 200 subscribers, so thank you to everyone. So February has not been a great month for stocks, but hey, that's fine. We are dividend investors on this channel, for the most part. We go for dividend paying stocks, so lower when the stock market goes down, we make more money because we make more shares, we get more income. So that's why I don't care about which direction the market heads. In fact, it actually benefits me if the prices go down and stay down or go and tumble even lower. I can just accumulate more. So that's why we have a positive mindset on this channel about the market, and I'm not too concerned about the daily fluctuations, which we're going to have. So that's a huge psychological benefit of dividend investing. That's why I prefer it, and that's why I've chosen it as my main strategy in my portfolio. So portfolio is at $12,060.02, down about $12 for the day, 0% in the last day. In the previous week, we're down $79.03, or about down 1%. Not much change there. For the month, we're still up 68.56, despite the market being, pretty choppy, pretty down. It doesn't seem to know, what people want to do, or it doesn't really want to head in a particular direction. It's just been trending down overall, having some days where it rebounds, but then going back down again. So people are very unsure at this point, just based on, the market activity. For the last 3 months, we're up 343.92, about 3%. And for the last year, we're up 1143.15, or about 10%. And all time, we're up 1141.85, or about 10% all time. With that being said, let's get into my portfolio and the buys. So I have about $17.90 in the cash account. So this is all dividend income I've received from my holdings, mostly my real estate and my income funds. So we're gonna deploy this a little bit later. So my purchases for the week were I reinvested the dividend that I received from Apple. I received about 90 cents from them. I just put back in $2.50 until my dividends are large enough to actually buy a fraction of a share, which Wealthsimple has a minimum of $1. I'm just going to round up and throw in a little bit extra, just so I'm growing these positions slowly over time. I wouldn't say it's a great price or anything right now, or the best value on the market. There's definitely better opportunities out there right now. So that's why I'll just reinvest the dividends for now for holdings that I find are not the best value, but of course I still like the company overall, and I plan to hold it for the long term. And we also, BAM actually announced a dividend increase. So they had fantastic earnings, and they raised their dividends by 8%. So I've held this position for about, a month or so, and I've already received a dividend increase. This is another thing I love about dividend investing, is that companies that grow their revenues consistently over long periods of time, they can raise their dividends to you, and you will receive more passive income without doing anything. I really wish that I got 8% increases, in other parts of my life without doing anything, but hey, I'll take it where I can get it for sure. We purchased 3 more shares of HYLD. So this is our American listed income fund that pays us a monthly distribution. So this one targets about 10% yield every year. So that is about roughly what you would expect to get from an S&P 500 ETF. So, and it gives us US exposure in this portfolio. As you'll notice, we're very, very Canada heavy in this portfolio. So I'm trying to get more American exposure. So this fund gives me that. It gives me a high level of income. So more cash will hit our cash account each and every month. And we can, examine what the best opportunity for that particular month would be. And we can focus on that and try to maximize our return, also increasing our passive income along the way as we learn more and we get more confident in certain industries. So I definitely like this approach where I'm going for dividend growth. I'm buying stocks that pay very low dividend yields but grow them at a high rate, or even find companies that are growing at fantastic rates like Alibaba or Tesla that don't pay a dividend but I do believe that they do have outsized growth potential in the long term. And because I have holdings that pay me a lot of income, I can have holdings like these that pay me very little dividends or no dividends at all, because they kind of compensate for the lack of passive income that these other holdings make in my portfolio. So I could do more things with my portfolio and have a bit more freedom because I target high income with the rest of my portfolio. And then Intel actually had a great announcement. They recently bought Tower Semiconductor. So this is going to be about a $5.4 billion acquisition. And it's just a great way. It synergizes with the business, and it's going to help them produce more chips right now. So this deal should clear in about the next 12 months. And this is a company that produces chips for cars, medical devices, and power management. So with this acquisition, Intel can, essentially make more chips for not the leading edge chips. They call it trailing edge when it's, something like older chips, but chips we still need. Like, obviously we need chips in cars, but they're much larger than the process nodes that we're currently on. So like, they're not the latest cutting edge chips. These are like, 200 nanometer, 300 nanometer. And then in our consumer chips, we're like trying to hit, 5, even go down to 3. So this is different from their main business. That kind of helps them diversify a little bit, I think. And this is going to help with their EVs, and, they could probably make medical devices for companies, or at least produce chips for that purpose on these larger, older nodes. But we still need cars. We still need medical devices. So this is a great acquisition by Intel. And it keeps proving to me that they're very proactive and they're serious about becoming a major chip manufacturer. So that's why we hold it in the portfolio. Also trading at pretty decent levels. I do have my 5% allocation of Intel, so I'm going to hold it for now. If it falls further, obviously I'll be more interested in getting it. I do like it in the low 50s. In my opinion, that's a decent price for Intel, but of course, do your own research. I'm not a financial advisor in the least, and you need to make sure you talk to one or do very thorough research, because you shouldn't copy anyone's portfolio. No matter, how much money they have, any stock or any investment doesn't fit with everyone necessarily. It has to fit you. So it has to fit your risk tolerance. It has to fit your financial goals. If it doesn't meet that criteria, then don't invest in the stock. I don't care which one it is. As for Microsoft, we also invested a little bit more into this. I've noticed that the American stocks have taken a bit more of a beating relative to the rest of the market. So I did do a little buy into Microsoft. So we went from like 1 and 3% of a share to 1. We bought like basically 10% of a share nearly, so up to 1.12 of Microsoft. And just like Apple, I'm planning to just reinvest the dividend into this company. Again, this is another company where I think, the valuation isn't a screaming deal, obviously, but the quality of the company is so high that it's very unlikely that it would drop to, such a tremendous degree. If it does, I will be more than happy to buy more Microsoft. That would be great news for me. So not deterred if this holding fell by 50%. I know where my money would be going. I probably would be focusing on the highest quality companies first before they rebound. I would be loading up on them. And Suncor Energy. So oil has actually been doing so well. It's actually hit the highest level it's ever hit since 2014. And one thing I noticed was that back in the financial crisis, back in 08-09, oil was inflating. It hit a level of 127 before the financial crisis in a giant recession. So yeah, that's right. We've officially predicted the next market crash on this channel. No, I'm just kidding. Nobody can actually predict the market crashes, but I just found it interesting to look at that graph and just the similarities of today. Just all the uncertainty and the Russia and Ukraine drama that's going on right now. Russia will invade Ukraine. The next week it's no, Russia will retreat their troops. I mean, when the world is uncertain, stocks generally tend to take a beating because uncertainty will lead to sell-offs because people just don't know what to do. And that uncertainty creates fear, and then fear creates panic in the market. And we've received $354.70 of dividend income since starting the portfolio. Annually, we're up to $605.92. Monthly, we're up to $50.49. So last week we were at about $50 or so. We just crossed that, so almost a 50-cent increase in a single week to our passive income, which is great. It's really going to help us go shoot for our next goal, which is to make $2 a day. So we just need to make this number $60, and every single day when I sleep, when I get out of bed, I have basically made $2. The first goal I had was making $1. We did that 6 months into the portfolio, so I would like to do this relatively shortly, but it's going to happen on its own no matter what I do. So we're going to continue depositing, we're going to continue reinvesting dividends, keep building that dividend snowball. And we're at $1.66 per day, so pretty close to $2 a day. Just got to keep it up. Months to earn $100 is another thing I'm tracking to track the compounding effect or the snowball effect in my portfolio, because the first time it took to make 100 was about 6.5 months, and then a little after a year, it's taking about less than 2 months right now to do that. So just all time, we can see that last month in January was our best month ever in dividend income, hitting over $54.06. This month is a little bit lower, $37.94, because a lot of our holdings pay quarterly, but that's fine. And another thing that my portfolio has been tracking is the dividends earned year over year. So in 2021, on the right-hand side, we've made $261.80 in dividend income so far. And then not even 2 months into this year, like a month and a half, we've already received $92.90. So we should overshoot what we earned in 2021. So the thing is, with dividend investing and having a goal of passive income, you can track your results. There's an actual number. You have an expected return of some kind, regardless of what your holdings are doing. So that's why I really think of my stocks as kind of a rental property. The value of it, if it goes up, okay, that's nice. If it goes down, not a big deal. They're producing cash flow for me. And as long as they produce cash flow for me and I can buy more buildings or, more stocks in this case, I'm going to receive more income. My portfolio is only going to head in one direction in the long term, assuming I pick quality companies. So again, do your research, really dig deep into these companies and make sure that they're quality companies headed in a positive direction, because when the market goes down, and it will, if your holdings go down 10, 20, 30%, you need to know what you're going to do. And if it goes down just based on market sell-off and fear, and it has nothing to do with the company, then, the coast is clear to buy those stocks. So that's how you need to look at your stocks. They are companies. You are owner of a company at the end of the day. So watch the company. And if you watch the company and you're very well aware and you're very knowledgeable about the company, then when the stock price goes down, you will know what to do, because you know what's actually going on behind that stock price, and you know that you're a part owner of a business at the end of the day. So with that said, please subscribe to the channel, like the video, and leave a comment in the description. I would really like to know how your portfolios are doing, and if you have any tips for any new investors out there. All right, have a great day, everyone. And I use Wealthsimple to buy and sell all my stocks. So you can buy and sell Canadian listed stocks and ETFs with 0 commission fees. So if you want to sign up for Wealthsimple, you can use my link in the description, and you can get the value of a free stock valued up to $4,500. Link in the description below.